Good morning and welcome to Car Dealer Live. I'm James Baggett, I'm the founder of Car Dealer Magazine, and today I'm chatting to Pendragon CEO, Bill Berman. Good morning, Bill.
Good morning, James. How are you?
Yeah, very good, thank you. Nice to see you. So just for those joining us, just a quick update. Pendragon announced to the stock market this morning their first half year results. Headlines of that's £31 million loss, but reported some improved trading for July and August, which is good news. Group said the pandemic had bitten hard, but despite that, it's performed resiliently. The results were delayed, though, after a postponement at the 11th hour on Thursday last week. Bill, before we go on to the results, I'd just like to cover that, please, if we can. At what point did you know that those results were going to be delayed?
About 30 minutes before we put the announcement out. Our auditors in this unique time, just the amount of work that had to be done and the amount of hours that were available in the day to get it done, had asked us towards the end of the day if we could push it off just to give them a little bit of extra time to make sure they were able to do all their due diligence and get everything done. Obviously, especially in these challenging times, we're more than willing, more than happy to sit here and acquiesce. And as you can see, the audit came out extremely well, and we're very happy with not just performance, but on the way the team performed even on the audit.
Because, I mean, Bill, forgive me, but there will be some people that were a little bit concerned that those results were delayed, especially what's happened with Lookers. We're still waiting to see what's happening with that dealer group. No idea when that's going to come out. There is a little bit of investor confidence lacking in the motor industry, isn't there, at the moment? And a delay like that at the 11th hour doesn't look good. I mean, shares dropped 11%, didn't they?
Of course it doesn't. And I can completely I could see as an investor where they would feel that way, whether it's a segment or even more specifically with ourselves. James, in the past, we've had some challenges, some self-inflicted wounds that we've had to get through. Rest assured, this is not one of those. If it was not for the pandemic and some of the challenges that's put out there for everybody, there wouldn't have been a delay in any way, shape, or form. But like I said, our performance was good for the quarter, and we came through the audit at a very high level. So we're very happy.
I did speak to a couple of auditors, Bill, and they said that the main reasons for a delay at the 11th hour like that would be a material issue or a going concern worry. Can you assure us that wasn't the case?
We have no going concern issues whatsoever.
Good to hear.
Absolutely, no, absolutely.
Well, thanks for clearing that up. Appreciate
Sure.
it. Let's move on to those results then. So first half of the year, a loss of 31 million. Is that a good result considering the circumstances?
I mean, if you compare it to last year, even with being shut down for 10 weeks out of 26, we still were able to beat last year. And if you peel back the onion a little bit, James, and you look into there, like I know you have, you can see where the bright spots of that were. Going into the lockdown, we were trading at a very high level. We were exceeding our expectations. We were outperforming the market. We were very happy with our performance. And then obviously the unprecedented, pandemic hit, and everyone had to adjust and things like the lockdown and get through that. You and I have talked about this before, but I think our team performed admirably. First on shutting down the stores and taking care of themselves and our customers, and then nextly taking that time to really work on the future of our company, whether it was right-sizing our dealer network, our store network, whether it was really looking at opportunities to streamline our business, find levels where we can be more productive, more efficient in our business model, and in the huge amount of savings that way. And I think the thing I'm most proud of is being able during that time to build a pure digital retail transactional website during that period of time, unlike what I've been able to see from anybody else so far. So, and I've talked about this too, but for September right now, about 20% of our sales through CarStore are purely digital, where customers are engaging with us. They never set foot in the store, and a car is delivered to their house, forthwith. So I'm very happy with the performance of the team, and very happy with the way the first half came out, and more happy with the performance since we've come out of lockdown.
So, Bill, I mean, that's an incredible performance, 20% of your sales online to used cars. I mean, especially considering there are some new entrants in this market, Kazoo, Kazam on the way, and others. What do you think that drive to digital is just going to continue? And is that going to be the driver to get you to this hugely ambitious 85, 90 million pound profit?
It's a piece. There's no one thing that'll get you there. If it was that easy, James, I would have retired 20 years ago, right? Just come up with one idea, it's easy. listen, automotive retail hasn't been truly transformed like you've seen in other facets, other retail industries. And the reason for that is cars are tactile, James. You touch them, you taste them, you feel them, you experience them. No other product has new car smell. Okay, and I don't know any VR that allows you to experience driving a Porsche 911 GT3R, right? Or the smell or the feel of a brand new vehicle, or the way you feel in a Land Rover. You just don't see those types of things. And as you even go down lower in the price points and maybe get to more just pure transportation type vehicles, it's hard to spend 10, 12, 15,000 pounds sight unseen. So there's always a piece of that. The way we're looking at it, though, James, is there's a segment of the consumer base that wants to do purely digital, and we're going to be able to facilitate that. There's a probably equal base that doesn't want to do anything online and do most of it in person. And then there's that wider base that wants a combination of the two. The industry stats are, 80% of consumers research somehow online before they buy a vehicle. To me, I think it's about 120%. I think everybody does some work online before they come in, who they're going to buy from, what car they want to buy. We want to get early into that process, top of the funnel, and be able to help them navigate through. If they want to start online and finish in the store, great. They want to start in the store and finish at home, great. And any combination thereof. And we've built that capability.
Bill, looking at these results, it must have been incredibly disappointing for you, considering that January and February you were £5.1 million ahead of where you were before. You must have been looking at actually what was going to be a pretty good year. I mean, what were you expecting to finish this year at had COVID not come along?
I can say this. The expectation from analysts was 20 million, and I think we would have handily surpassed that. But some of the strategic things we wanted to do and some of the different things would have taken a lot longer to do. And we're able to take advantage of that lockdown and come to market with some of these new systems and processes. On the flip side of that, we were able to right-size our business model, get our costs under control. And I think we're going to come out of this even better than we were going into it.
So how quickly can you get back to that number that you were predicting at the start of this year?
If I could predict that, I wouldn't have to do this, James. Obviously it depends on the market. If things go the way they are, it'll be sooner than later.
Good news. So just a little bit more detail on those numbers, if you may. I mean, firstly, that £31 million loss in the first half, you compare it to say rivals like Marshalls, who have already announced their first half results. They posted a loss of 8.9 million for the same period. You're roughly twice the size of them. So I was sort of expecting a loss of around the 18-20 million pound mark. What pushed it far worse than that to 31 million?
Listen, I don't want to point fingers at our past. I think the job that Marshalls did was phenomenal. I think they run a great business. I think we didn't have some of the efficiencies that they have right now that we've got ourselves up to or trying to get close to. We have a different estate than they do. We have a different mix of stores in different locations. We have a different cost structure. Some things we have control over, like staffing models and things like that, and other things like our property portfolio and our leases that we don't. So it's always hard to compare these things apples to apples. But I think the moves that we've taken in place, once again, shutting down non-profitable stores, right-sizing our headcount, is putting us in a position to be able to compete much more aggressively, i.e. some of those other big players out there, the Virtus, the Marshalls, that did perform very well through the lockdown, through the first half. They were not able to sit here and have the ability to do the cost reductions we were able to do because they run, in some cases, a more efficient business than we did prior to lockdown.
So I'd say you're probably thinking the same way when it comes to Virtue, for example, because Virtue, Robert Forrester announced a £7.4 million profit in July. You've done 7 million in July and August. So I mean, is the same argument true there?
I don't. You know what? Listen, it's they run their business, I run mine, but I would say that things would go similarly to that. Listen, both those businesses run very well. You know what? Right now we're catching up, and hopefully, in the foreseeable future, they'll be trying to catch up to us.
So, Bill, I noticed there wasn't too much in your results about used cars. I mean, they're mentioned a few times, but I mean, I was kind of expecting it to be pretty heavily focused on that, if I'm honest. Used cars are really buoyant, as we know, and selling well. What are your thoughts there? I mean, is that one for the future? I mean, was it purposely kind of underplayed?
No, not necessarily, James. Listen, our used cars are performing in line with the market. We're very happy with the used car performance. You'll see a little bit of noise in our numbers versus the others because you remember last year we still had the full 32 car store outlets operating at that point in time. So our true trading revenue is a little bit lower than a year over year. But once again, it's what we're comparing against. On a like for like, we're up to the pretty much in line with the market, and our margins are up proportionally to that as well. So very happy with that. We just looked at it in aggregate and wanted to focus on what we found to be really important, which was the strategic pieces of it. Used cars right now isn't being, driven right now by anyone's overall performance versus what the market's generating more than anything else.
This new strategy, Bill, this 85, 90 million pound profit within 5 years, a hugely ambitious target. Have you got the right culture and people in place to achieve that?
You know what? I think all that type of stuff is, a journey, not a, destination. I think we're better today than we were 6 months ago, and 6 months from now we'll be better than we are today. If you look at that 85 million target, we've delivered almost half of that, James, just by right-sizing our store estate and by right-sizing our headcount and, putting their efficiencies and our processes into place. So when you really look at it, we've already done a lot of that heavy work, and the rest plays out. The other thing is we're not forecasting huge amounts of growth within the market to help drive that. So this isn't the market has to grow at 15%. This isn't that we have to grow twice as much as the market. This is saying we're going to have a down market for the next several years. We'll be in line with that market, and then we're going to do these different aspects, whether it's driving the performance out of Pinewood, whether it's the continued performance coming out of UK Motors, and then as we open our new car store model going forward and how that plays out.
Because some people would look at that number and think that's a monumental swing, but from what you're saying, it sounds like you're very comfortable in being able to achieve it.
Yeah, I mean, if you look at it, like I said, analyst forecasts for 2020 were 20 million. We sat here and were able to save, 36 million in our cost initiatives. If you say only 30 million of that translated, to bottom line, because there's a volume component of that too, that would put you off of analyst at 50 million. So we're 2/3 of the way there. And we haven't even got into the things that really start to bring the value in.
And I know you're negotiating a deal on that last American site, and I know you were pretty disappointed with the deal you got on the others. I mean, what are you hoping for from this Santa Monica one?
Well, I mean, I'm not disappointed in the deal. I mean, we got market value for them. They were great assets and unreplicatable. So I was more disappointed that we had committed to sell them more than anything else. Santa Monica, just like Beverly Hills, just like our other ones, is a desirable location. It will sell quick.
And finally, Bill, how's September panning out for you? I mean, we're a couple of days away from the month end. I mean, some people are telling me that the pre-reg is not happening quite to the extent it did last year. What can you tell me about September?
Yeah, the pre-reg is nowhere near what it was last year. Listen, March is the second biggest month of the year in the UK. Is performing to that. You probably won't get the growth that you've seen that you saw through maybe July and August, but it's performing at a high level. I mean, James, you know this more than anybody else. SMMT data is showing a decent increase in volumes on a year-over-year basis. A lot of that's being driven by VW and Audi, which unfortunately I don't have any representation for. If you take those out, I think you're down a couple percentage points out that way, and I think everyone's pretty much performing in line with that. But margins are good. Used car performance is solid, and after sales is continuing to chug along at a really good pace. So overall, very happy and excited for things. Only other caveat, I think actually there's a decent amount of sold orders that are going to carry over into Q4, which should help out at least, especially in the first part of it, October, maybe in the first part of November.
Yeah, we could do with some good news going into quarter.
Right?
Yeah. Bill, just finally.
Or maybe just not bad news, James, right?
Well, that would be nice. Just finally, just before you go, what's the most pressing thing on your to-do list at Pendragon, Bill, at the moment?
You know what? It's just keep running the play that we've called out this way. And, James, the only other thing I really want to say is just for this, because I know a lot of our associates listening, is just how proud I am of the performance that they've done. Ideas are easy. Execution is hard. They've done the heavy lifting, protecting themselves, our consumers, and then going out there and executing the strategy that Mark and the executive team and I put out that way. So just very happy and very excited for the future.
And Bill, from our side, I'd just like to say it's nice to see someone out front and centre at Pendragon actually ringing the bell for you guys and speaking up. So thank you for giving up your time.
Appreciate it.
Appreciate it. Great stuff. Thank you, Bill. So thanks very much to Bill there for joining us. If you'd like more videos like this, log on to cardealermagazine.co.uk and click on the live tab at the top of the page. I'll see you next time. Thanks for joining me. Goodbye.